How's it going, everyone, and welcome back to another YouTube video. So one of the main questions that I get asked, whether it's on my live streams, in my comments, in my DMs, is, Joe, what's the easiest way to find and trade liquidity? So in this video today, I'm going to break it all down very, very simply. So it's going to be me showing you how I find liquidity, how I trade away from it, and basically how I use it to find entries and how I use it to find my targets. Because when you can understand these main things, it's going to make your trading so much more easier, and you're going to be able to find much more higher probability setups when you understand liquidity. So seriously, if this is something you're struggling with, just lock in for the next 15 minutes. Let's not waste any more time. Let's get straight into it. So before I show you any trade examples like I've got here and here, first of all, what I want to do is give you a basic understanding of where liquidity is sitting and why it sits where it does. So if you look at what most traders are taught in the beginning, what are they taught? Well, they're taught that, okay, price trends down like so, and price trends up. Okay, you can see, what is this chart to the left doing here? Well, it's creating lower lows. What's this diagram to the right doing? It's creating higher highs. One's pushing down, one's pushing up. And what most traders are taught, we'll use this diagram here to the right first. What most traders are taught is, okay, we're pushing higher, we're creating higher highs. Once price comes into this level here, I'm going to start buying at this level, okay? If I can buy at this level, all I'm going to look to do is let this continue pushing higher. I'm going to buy here and watch price just easily continue higher, stops below the level, below these lows to the left, because that's where I'm safe. And this is what retail traders are taught. This is what their basic Forex beginner course tells them. Wait for a break of structure, buy the retest, looking for price to push higher. But let me tell you, the charts really don't move like this at all. The charts do not move like this. And this is why most traders fail, because what will tend to happen is before they actually get that push to the upside that they're looking for, their liquidity will get taken. Their stop loss will get taken. So let's say that what they're seeing here is they're looking for buys, looking for this play higher, with stop loss, let's say, on these lows to the downside. Them putting their stop losses on these lows, all that does is build so much liquidity to the downside. That just builds liquidity below these lows. And all liquidity is, keep this in mind, all liquidity is money. Just think of liquidity as money. And before any move in the market, price needs to hit that money. Price needs to take that money. So if we're in a uptrend, for example, like so, that's absolutely fine. The market can keep pushing higher. But if you think that it's going to perfectly trend and retest like this, well, you're just going to carry on losing, and you're going to carry on getting liquidated before the real move. Because what will tend to happen in this example, or in basically every example, retail traders will buy. That'll just build liquidity below the level and below these lows. And what will happen is they'll get taken out before the real move to the upside. And look what price is doing here. Price is just coming down, taking that money before the real move to the upside. And they've taken, again, a big loss before the real move. And they're left wondering, why has price just edged my stop loss? Why have I just been taken out before it smashed my TP? Well, the reason is because their stop loss is so obvious, and their stop loss is where all the liquidity is sitting. Price was obviously going to take it before the real move. And understanding this first is super, super key, because if you understand where liquidity is sitting, you know where price needs to trade into, and therefore once it's traded into it, you can then trade away from it. And all I look to do is establish where the liquidity is. For example, you can see liquidity is down here. You can see liquidity is up here too. All Joe looks to do is understand where retail liquidity is sitting, trade into it, and trade away from it. So I'll actually be looking for sells into it and profiting into the liquidity. Once we've taken that, I know price is likely to reverse, and I'll look to trade away from it too. So it's the same if we were looking at, sells as well. Let's say that we're looking at this downtrend here. What are retail traders looking to do here? Well, they're looking for that perfect break and retest. Sells. What does their retail course tell them? Well, it says, sell the retest, wait for that breaker structure. You can see here, price has broke structure. It's come up for a retest. their basic call says, okay, sell here, stop loss above them highs because you're safe, and basically just look to ride this trend down. And yeah, 1 time out of 10, you might see this perfectly retest and continue pushing down, and they've smashed TP. But 9, even sometimes 10 times out of 10, you're going to see price take that liquidity above the level and above that high before the real move to the downside. And if you look at a chart now, whilst you're watching this video, the markets don't move like this, okay? The markets don't perfectly trend. Let me just remove this so I can put this on clearer. The markets don't perfectly trend like this to the right. They actually trade like this here to the left. If you look at an actual chart, let me delete these examples. Does the chart move like this to the right here or like this? It moves like this. Look at this. Look what price does. It's perfectly trending up. Guess what? Look, liquidity grab, push higher. Look, perfectly trending down. Liquidity grab, push lower. Look at this here. Price, break structure above. Does it just perfectly buy from this level instantly? No, it doesn't. What does it do? It pushes down, takes liquidity, and pushes higher. Can you see? If we're looking at this chart here, all this has done is this. Push down, pushed up, push down, taking liquidity before the real move. And that is how the markets actually move. They don't perfectly trend like your basic course tells you it does. It takes liquidity first. For example, if we are looking at this, the chart will come down, grab some liquidity, and then it will make the move. It will come down, okay, 1 second, grab some liquidity, and then make the move. It will grab liquidity, and then guess what? Once we've grabbed liquidity, then it will make the move. And understanding this first is super, super important because you can actually use this information to understand where price needs to go and you can trade into it. And I'm going to show you some examples now, okay? Okay, so if we're looking at this chart now, we need to understand what are retail traders seeing here. Just like I've mentioned in the beginning, what are retail traders seeing here right now? Well, what are they saying? They're saying, okay, price has actually had this push down here to the downside, and it's actually retested, or it's retesting a level. You can see we've had a breaker structure and we're coming for a retest of this level here, and we're actually starting to reject off this level. So their course tells them, just like I mentioned in the beginning, okay, breaker structure, look for that retest to continue pushing down. So most people at this level now are looking for sells. And where are they putting their stop losses? Well, they think their stop losses are safe above the level and on the highs above the level like so. Can you see? You've got this level here, we're above the level and these highs. And they're just looking for this big play down like so. And we understand that this is very unlikely to work. We understand that before the real move to the downside, we at least need to come and take that liquidity. Like I've mentioned at the start, think of highs and lows where obvious stop losses are sitting as money. And before that real move to the downside actually happens, we're not going to sell from here instantly. We'll come up, grab liquidity before the real move to the downside. And look at this. If we know that before the real move to the downside happens, that we're likely to push into these highs in this area, if we know 90% of the time price is actually going to come and take that stop loss, why wouldn't I try and trade into there? And that's exactly what I do. I basically will find a range where retail traders are actually trading from. So put it this way, retail traders are selling from here, retail traders are buying from here, and I know if I can get a closure above there, we're likely to push into this area where retail traders' stop losses are sitting. Just like I've mentioned, what are they doing? Well, they're selling from this level here with stop losses above here. If I can get a closure above there, that's a confirmation for me to actually buy into their stop loss. And that's all I would wait for here. I know that liquidity is sitting up here. Price is likely to trade into there. So what I'm going to do is I'm going to wait for that closure above. Now I've got my closure above the level. I know we're likely to push into above that liquidity because look what price is doing. Price is building liquidity above from anybody buying and selling this level. Anybody selling here, you're just building liquidity above them highs to get taken. All I'll look to do now is trade into that liquidity, and look what happens. In literally one candle, one 30-minute candle, price smashes that TP up there. You can see that's where the liquidity is sitting. I understand where liquidity is sitting. All I'm going to do is trade into that because, like I've said, anybody selling here or from here, this level, we know that they're failing traders. They're trading very, very basic concepts. They are trading this, okay? Literally as basic as this. Price breaks a level. Oh, we're going to retest. All I'm going to do is sell the retest. That's super, super basic. And we know their liquidity is sitting above there. All I'm going to do is wait for that closure above to buy into that liquidity and trade into where their liquidity is sitting. And that is literally the easiest way to spot liquidity as well in the market. The easiest way to spot it. Liquidity is basically highs and lows in the market where obvious liquidity or obvious stop losses are sitting. You can see here, obvious stop losses are sitting above here. Why? Because anybody selling from this level is going to have stop losses above there. It's the same for anybody buying. Let's say that price comes down and rejects this level like so and creates, instead of this resistance, a level of support. If anyone's buying from here, where are their stop losses going to be? Well, it's going to be obvious lows. And the obvious lows are here. You can see obvious lows. So all I would look to do, is understand that all the liquidity is sitting below here now, which is just obvious lows below that level. Let's just mark it up here. And all I would look to do is, just like I showed you on the buys, is I would look for a break and closure below there and then trade into that obvious low. And look at what's happening here. You know, look at what's happening every time that I'm looking to trade into liquidity. I find liquidity and trade into it. And look what happens every time. Retail traders buying from this basic level with stop losses below there, they've took buys, they've taken a stop loss. Me, understanding where their liquidity is, not trying to predict what price does, but waiting for their level to close below and then trading into their stop loss, I've taken a win. I'm taking wins, they've taken a stop loss. Look at the example I've just shown you. Let me delete all these, okay? Where are they selling from? Well, you've got a basic level here, just like I've mentioned. Where are the obvious highs above? Well, there's obvious highs here that their stop loss is going to be sitting above, okay? If we play this forward, where are they selling from? They're selling from this level here, looking for this big play down, stop losses above like so, okay? Well, look at this. If we play this forward now, look at what we've got above this level. We've got a nice closure above this level. I'm buying into that liquidity on confirmation. And if we play this one candle forward now, look at what happens here. Look at their stop loss. Their stop loss has been smashed. Look at my TP reacting to the closure above. My TP's been smashed. I've taken a win. They've taken a loss. And the reason is because I understand where their liquidity is sitting. I understand what levels they're buying and selling from. Basic retail levels of support and resistance. I know there, for example, if you look at this, okay, let me delete this. I know this is a basic level of resistance. They're going to be selling from here again. Stop losses above this high. If I get that closure above, they're in trouble. I know they're in trouble. I'm buying into that area of liquidity. Them stop losses, that money which price needs to go and take. And look what happens. Look at their stop loss. Their stop loss is up here on these highs. I've taken a win buying into the liquidity. Look what happens, just like I mentioned at the start of the video with the diagram, when their liquidity gets taken. The real move to the downside happens. And they're left wondering, why has my stop loss just been taken before the real move? Well, what Joe's doing is this. He's waiting for their liquidity to get taken, and I'm buying into their liquidity, and I'm trading into it, and I'm making money trading into it. But look, once we've taken their liquidity, I'm trading away from it as well. Look at this. Price comes up, takes the highs. I've bought into it, made money. We get that nice bearish candle rejection, taking liquidity. I'm selling into the next liquidity now. That's the second way I trade liquidity. I trade into it and away from it. Where's the obvious lows? Just like I've mentioned 5 minutes ago, obvious lows are down here. Anyone buying from this level, this is where the obvious liquidity sitting. So what I'm going to do, I'm going to wait for liquidity to get taken, buy into it. Once it confirms here, I'm going to sell away. Simple as that. Trading into and away from liquidity and understanding where basic retail liquidity is sitting. And that is as simple as I keep it. So what I'm going to do now to make sure that you all understand it is I'm going to show you one more example of this playing out, because it plays out multiple times every single day. Okay, so I've got another example, and this, I only replayed it. You know, the first two trades that I showed you then were literally here. I've literally replayed it back like a couple of hours here on the 30-minute, and there's another example. So what am I doing? I'm finding basic levels where retail or most traders are likely to be trading from. Look at this. I've got a recent level of support and resistance here. Look at this. Recent level of support, recent level of resistance. Let me put that back on. Recent level of resistance. What are retail doing when they see this rejection, this bearish candle rejection? They're thinking to themselves, oh, my course tells me to wait for that break to the downside, wait for the retest, and sell the rejection with stop losses above. That's basically what their course tells them. As basic as it is. You probably have traded simple break and retests. They don't work. I used to trade them. Most people, 99% of people when they first start trading, trade basic retail break and retests, and they just don't work. It's just impossible. They don't work. And all this is doing is, look, building liquidity above these highs here. And what is liquidity? Liquidity is just money. And that money needs to get taken. So what is the first way that I trade liquidity? I wait for that break above. Let's just keep looking. Let's keep playing this forward. Oh, perfect. Break above. Look at this. Obviously, I'm getting a bit more technical here. There is more to it, but look at this. Liquidity's got taken below. Nice closure candle above. What do I know is likely to happen now? Well, I know retail traders selling from here with stop losses above here and now in trouble. I know that they're going to be closing their positions in drawdown. And what happens when people in sells start closing their sell positions? Buyers take control, and what happens? Price starts pushing higher. Okay, if anybody's in sells from here, see these green candles pushing through their stop loss, they're going to start closing them stop orders, or they're going to start closing their sells, and that's going to shoot price higher. So now I've had that break and closure above. We'll just push this to the side, their sell. I'm actually going to buy here. We'll just keep stop losses below these lows for now, just to let it play out, and look what happens. Look at what happens, guys. It works so well. It works so well. They're in sells. They've taken a big fat stop loss. My TP has been crushed. Let me just move this to the left. Their stop loss has been smashed. My TP has been smashed. 230 ticks, just understanding simple liquidity concepts. And the great thing, just like I showed you in the last example, look at what happens once we take their liquidity. I get a nice rejection taking liquidity to the upside after taking their highs. Look at this. Their liquidity's been taken. I can then sell away. As simple as that. I can sell away from it. Another 200 ticks. So I've taken buys into their liquidity on the break above their level, which they're selling from. They've taken a stop loss. I've made 230 ticks in profit, crushing their stop loss as my TP's been hit. And guess what? Now their stop loss has been hit and they've missed the sells. They're thinking to themselves, oh, I've missed a real move to the downside. My stop loss has just been taken before the real move to the downside. Why has that happened again? It's because they don't understand liquidity. And if you don't understand liquidity, guess what? You are the liquidity. Joe's made 230 ticks on the way up, and guess what? He's sold away from their liquidity once it's been taken and made another 200 ticks. 430 ticks, trading simple liquidity concepts, basically doing the opposite of what retail are doing. Understanding where they're entering, understanding where their obvious liquidity is sitting, and basically just trading into it and away from it using simple concepts. And like I say, that is me keeping liquidity very, very simple. I do have a playbook of entries that I trade with these liquidity concepts. I've got 3 playbook step-by-step entries that I do take. If you do want to learn them in detail, guys, go and watch some of my other YouTube videos. If not, and you want to learn them with me one-on-one, go and apply for the mentorship. I'll leave the link in the description and in the comments. You can go and apply and work with me and start keeping trading simple. You can learn my whole strategy and my full playbook using liquidity in the market cycle. So if you do want to learn with me one-on-one, go and apply. It takes like 30 seconds to a minute. Go and apply and we'll be in touch. But that is the video on liquidity. I hope you can take some of this into your own trading and start keeping liquidity and trading as simple as it needs to be, because you don't need to overcomplicate it. That is as simple as liquidity needs to be. I hope you've liked this video, guys. Make sure you drop a comment. Let me know what you thought about the video. If you've got any questions, I'm going to be active in there. Drop a like and a comment as always, and I'll see you in the next one. Peace.